opportunity. We have with us today Mr. Atul Lal, Vice Chairman and Managing Director, and Mr. Saurabh Gupta, Chief Financial Officer. I shall now hand over the call to Mr. Lal for his opening remarks. Over to you, sir.
Thank you very much, Naval. Good evening, ladies and gentlemen. This is Atul Lal, and we also have on the call today our CFO Saurabh Gupta.
Yeah, good evening, everyone.
Thank you very much for joining this earnings call for the quarter ended March 2021. I hope that you and your family are safe and healthy. We at Dixon are dedicated to the health and safety of team members. As such, we continue to invest in our policies and protocols to operate in the safest manner possible in the face of challenges presently. Coming to the numbers, consolidated revenues for the quarter ended March 31, 2021 was rupees 2,111 crores against 857 crores in the corresponding quarter last year, which is a growth of 146%. Consolidated EBITDA for the quarter was 80.8 crores against 55.9 crores in the same period last year, which is a growth of 45%. Consolidated PAT for the quarter was 44.3 crores against 27.6 crores in the same period last year, which is a growth of 60%. Gross margins and EBITDA margins contraction on year-on-year was primarily driven by substantial change in segment mix with a higher increase in share of business during the quarter from LED TVs, which is an OEM business with a lower margin, and also steep input in the price increases on the commodity side, which had an impact on our ODM business. EBITDA also factors in the ESOP expenses of around 8 crores in Q4 on account of new ESOP plan 2020. Adjusted for that, the EBITDA and EBITDA margins should have been higher. A rapid and large increase in commodity cost, which started happening since November 2020 and continued throughout in Q4, has impacted our contribution and EBITDA margins. In our ODM business, that is primarily lighting and washing machine, wherein we offer design solution, there is a lag in passing on the increase in commodity prices. So in short term, there has been a negative impact for some time, till the time we have passed on fully to our principals. So in lighting business, majority of the cost increase was passed to the principals in the last quarter itself largely, while in the case of home appliances, the same has been already passed on in Q1 of the current fiscal. Our frugal cost structures and a large scale gives us a comparative edge in the challenging situation. We are monitoring the situation very closely and are confident of addressing the margin pressure in our ODM business through a combination of calibrated price increases, inventory planning, and also value engineering. Overall, fiscal year 2021 has ended with a fairly strong growth in revenues and profitability, as the teams have demonstrated their ability to resolve and to mitigate the challenges and complexities of COVID-19. As you all know, the second wave, unlike the first wave, has turned out to be more ferocious, spreading wider and significantly impacted demand even in the rural areas. From second week of April, the growth has slowed with further deceleration in May. We are cautiously hopeful that by May end, one should start seeing at least some of the states and districts starting to open the lockdowns or allow the markets to function and see an uptick in demand. However, we strongly believe that in Dixon we have a platform to sustain a strong revenue growth moving forward as and when the overall demand strengthens. We are well positioned with a robust balance sheet. We have a cash balance of 164 crores and net debt of -8 crores as on 31st March 21. Our balance sheet strength enables us to weather any future uncertainty and invest in the long-term development of our business. It has enabled us to continue to invest in our organization and people through this challenging period of COVID. We also continue to step up our investments in people in hiring and development of R&D and design capabilities, the benefits of which are already showing results, and long-term results will continue to be realized over the years by the organization. In addition, in the last fiscal, at the end of March 31st, we have delivered strong return ratios with ROE of 25% and ROC of 31.4%. Now I'll share with you the performance and the strategy in each of the verticals going forward. Revenues for the quarter, that is with consumer electronics I'm sharing, under review was 1179 crores against 393 crores in the same period last year, which is a robust growth of 200% led by both volume and pricing growth. Operating profit also saw an extremely good growth of 189% against 28.2%. This is 28.2% in Q4 financial year 2021 against 9.8 crores in the same period last year. We presently have a capacity of 4.4 million TV sets, including backward integration in both LCM and SMT, which is the largest capacity in India. We have also started production of large screen TVs like 70, 75 inches and 85 inches for our anchor customers. As we had shared with you earlier, we are further expanding our capacity to 5.5 million in the next couple of months, adding new automated 65 inches integrated line with LCM and FA, and also one more high-speed SMT line to meet our customers' demand. So we will have the largest capacity, which is more than 35 to 37% of Indian requirement. And similarly, our PCBA capacity with new line of SMT is going to further increase from 1.8 million to 2.8 million. We have a total factory area of more than 500,000 square feet, which is in the campus of Tirupati. We are further investing in backward integration by setting up an injection molding unit. So it will be one of the most backwardly integrated plants in LED TV in India. We are vertically integrated. We have the largest capacity in LED TV, and we also have a large R&D team. Our R&D team has developed new cost-effective solutions and technologically advanced Android TV set with customized features for our various customers. In this particular vertical, now we're getting into a new product SKU, which is LED monitors. I'm pleased to inform you that we have tied up with two largest global brands for manufacturing LED monitors. And the production will commence from Q3 of current fiscal. The lines and equipments have already been ordered, and we'll be creating a capacity of 1 million LED monitors to start from Q3. The expected volumes in the year one will be in the range of 0.5 million LED monitors, and we expect the order book to significantly increase from year two. The revenue and the profitability numbers are being worked out, but we expect it to be in similar range as LED TV. Now coming to our next vertical, lighting. Revenues for the quarter again witnessed a strong growth of 50% year on year. We had a revenue of 382 crores in Q4 against 255 crores in the same period last year. And this is again a strong growth trajectory which we have been able to demonstrate. Operating profit also witnessed a good growth of 21% year on year. We had an operating profit of 31 crores against 25 crores in the same period last year. The margins in lighting business have contracted because of the impact of input cost, as there is always a lag in passing on the price increase. However, in the case of lighting, most of the cost increase has already been passed on. All the brands in lighting business are on ODM basis, and also a large percentage of our sales is being sourced from Dixon today. We are India's largest ODM in lighting and have the largest capacity in various SKUs. So in LED bulbs, we have a capacity of almost 300 million, which is between 45 to 50% of the Indian requirement. We have also developed solutions for smart LED bulbs, battens, downlighters, and emergency bulbs for various customers. As I had shared with you last time, we have expanded our capacity of battens to 3 million. The Indian 3 million a month, and the Indian requirement is around 7 million a month. So we again have a large scale there. And similarly in downlighters, we have expanded our capacity from 600K per month to 1.5 million. The Indian requirement is 3 million. In addition, we also have created a capacity of 5 million per month of 0.5 watt decorative lamps. We feel with the kind of volumes and entire range of product portfolio, we are now globally competitive and among the top companies in the world as far as the volume is concerned. We are working on certain export and global contracts. We are expecting a significant breakthrough because the final approval on the technical side is on, and I expect some good results to come out of it within July, August. As I had shared with you last time, we are in the process of developing outdoor lighting solutions, namely street lights and commercial lights, and these will be launched in Q2 of the current fiscal. The Government of India on 16th April 21 launched the PLI scheme for manufacturing of components of LED light. The detailed guidelines of the scheme have also been rolled out. This is a part of a effort of the government to create the component ecosystem. We are closely studying it, and in all probability will be pursuing it, particularly on the mechanical side for the LED lighting solutions, because that's a part of backward integration, and we have a deep understanding of that particular domain. Coming to home appliances, the revenues for the quarter again saw a sturdy growth here of 63%. From 90 crores in Q4 of 1920, it has grown to 146 crores. But on operating profit margin side, there has been a significant pressure because of the increase in input prices on commodities, and there has been a lag in passing on the increase in the commodity prices in last fiscal. But let me assure you that the same has now been passed on to our customers in Q1 of the current fiscal. We presently have 140 odd models and have the largest product portfolio ranging from 6 to 12 kgs across the semi-automatic category. And now we are expanding our capacity to 1.5 million from 1.2 million, which will happen by August, September this fiscal. In the new facility for fully automatic top loading, which has been a plant that has been set up in Tirupati, is now ready with all the machine installs. The trials have been completed, and the samples have been submitted to our customer, to our anchor customer Bosch, which is under approval. We are expecting the commercial production to start by end August, early September. In this, we have approximately 40 models, again the largest range between 6 kgs to 10 kgs, and this will have an annual capacity of 6 lakhs. And the various agreements with our existing and new potential customers are in works. Coming to mobile, phone and EMS division, revenues for this division for the quarter grew to 290 crores against 60 crores for mobile revenues in the same period last year, which is a growth of almost 381%. In the current quarter, the revenues for set-top box and medical equipment business in this vertical was 46 crores and 92 lakhs respectively out of 290 crores. Operating profit was 7.4 crores against 8.4 crores. This is on account of increased fixed cost in terms of manpower and other overheads that has been built in setting up the new factory under the PLI scheme. It has already been set up and the commercial production has started. But you know that in our business, there's an initial ramp-up cost which has led to the pressure on operating profit. So we've already commenced commercial production for Motorola in mid-March, and also the production for Nokia has started in February. We are confident of achieving the ceiling revenues of this financial year under the mobile PLI. We are making further investment to meet the threshold levels, and we'll be targeting to take the capacity up to 15 million per annum in the next couple of years against a present capacity of 3.5 to 4 million. We have a strong order book from Motorola, and out of this, 60 to 65% will be for the export markets. We will start exporting from Motorola to SAARC countries next week and to US by first week of July. We're the first Indian mobile manufacturing company which has an infrastructure that is capable of building the 5G phone as per any global requirement. Further, we have created a land bank of 5 acres in Noida, which has been directly allotted to us, in which we'll be setting up an integrated mobile phone facility family. Set-top boxes. As far as set-top boxes concerned, we manufactured 6 lakhs set-top boxes in the last quarter and 21 lakhs in the whole year. In Q4, we had a revenue of 46 crores, and in the whole year, we had a revenue of 156 crores, with approximately 3% operating margin. And the order book in this vertical looks very healthy, with almost 0.5 million set-top boxes per month. But due to shortage of components, we feel confident that we should be able to do approximately 0.35 million per month starting Q2 this fiscal. Medical electronics, we have manufactured almost 550 odd units of RT-PCR machines. It generated for us a revenue of 13 crores with an operating margin of 28% and a strong ROC, because in this, the investment in the form of working capital is very minimal. In security surveillance business, we have seen a strong growth of 100% year on year in this quarter. We did a revenue of 109 crores in Q4 versus 54.6 crores in the same period last year. Operating profit also increased from 1.9 crores in Q4 last year to 3.1 crores in the current fiscal, which is up by 66%. We have again, because the order book in this, as committed by our principal, looks healthy, so we're further expanding our capacity. Now I'll share with you and update you about the opportunities on which we are working. So we had shared with you that we are going ahead with a refrigerator project in the direct cool category. So we've already kicked off this project. We've got the market study done. We have finalized on the technology partner. We have started building our team. We've got the project manager and the R&D managers in place. The project design is under works. So we'll be initially creating a capacity of 0.6 million, which will be in phase 2 with some balancing equipment be ramped up to 1 million. Please appreciate the Indian requirement of DC refrigerators around 10 million, so this will be 10% of the Indian market. This will be in the category of 170 liters to 220 liters. We have applied for 10 acres of land back in Greater Noida, and we are confident that we'll be able to get it. The target for commencing commercial production in this particular product category is Q3 of next fiscal. The next opportunity that the company is pursuing is laptops, tablets, and IT hardware. So we have application under the PLI scheme on 29th April 21, and we are a strong contender for the same. Approval is likely to come in a month or so from the government. We have already signed an MOU with one of the largest global brands for start manufacturing their laptops, and we are in discussion with some other large global brands to pursue this business. The next is telecom and networking products. So as we have already shared, that we have entered into MOU with Bharti Enterprises to form a JV through wholly owned subsidiary of Dixon Electro Appliances Private Limited. This particular company will be submitting application on the PLI scheme. The scheme has been announced, but we're still awaiting the guidelines. And this will be for basically IoT devices, modems, routers, and various other telecom products. This JV, Dixon will be owning 74% and 26% by Bharti Group. We'll be filing our applications under this scheme. Also, let me share with you that irrespective of this PLI scheme, we have finalized an agreement with a principal for manufacturing modems and routers for supplying to the telecom operators. And this kickoff is going to take place within Q3 of this fiscal. Also, next we are pursuing the PLI scheme for AC components. As you know, that we are already a supplier and it's a more than 100 crore business for us for PCB assembly for controllers for AC. So we are in discussions with a Japanese partner for the JV on this, and here the deeply embedded supply chains of this partner in China for servicing global markets is being worked upon to be shifted to Dixon to this JV for servicing not only the domestic market but also global markets. So this is what I wanted to share, and now we look forward to the Q&A. Thanks very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Aditya Bhartiya from Investec. Please go ahead.
Hi, good evening, sir.
Good evening, Aditya. How are you?
I'm doing good, sir. Thanks. So on the mobile phone business, just wanted to understand if we are having discussions with any additional customers also. And it does appear that some of the other players who have filed for PLI application may end up missing their targets. So does that open up a much bigger opportunity for us with the ceiling numbers that we are seeing?
So I would say, at present, the large tie-ups that we have are with Motorola and Nokia. We are in works with, a player from the global markets for export to U.S. market for the operators there. I'm not in a position to share the finer details because it's in works, but we are targeting to start exporting the 5G phone to U.S. for this particular brand from August, September. So that's also going to be a large business for us. Now, what you are stating is correct. I'm keeping my fingers crossed. And we're pursuing these relationships, hoping that the overflow benefits can accrue to us. Because I find the global market is still strong, and I still feel that our anchor customers are absolutely committed and the numbers are going to be fine.
Sure, sir. And on the set-top box business and the medical equipment business, how should we really look at the revenue potential of these two verticals?
So, the business is on a strong footing. At present, our major customers are Jio for Dell and Hathway. And also, we are now supplying to Dish TV and also City Cable. So the order book is extremely robust. The order book is almost 0.5 million a month. And but at present, there are challenges on the supply chain side, particularly on availability of chips. That's the reason in my opening remarks I had shared a slightly conservative number of almost 0.35 million per month. So with that, I think the revenue is going to be in the range of around 450-500 crores.
Sure. And if you could give some indication about the medical
electronic side, the numbers have trickled down. So I feel that it's going to be somewhere around 50-60 pieces a month. There's a high value SKU. So it will be somewhere in the range, I feel, of around 12 to 13 crores a year.
Understood, sir. And lastly, sir, I think we are looking to be participating in PLI schemes for lighting, IT hardware, and telecom sectors, along with now ACs as well. So all these 4 PLI schemes we are thinking of doing, right?
That's right.
Could you also give some indication about what could be the Capex requirement for all of this put together, along with the normal Capex requirements, Capex needs for refrigerator plant, as well as the capacity expansion Capex, and how you're looking to kind of fund it? I'm specifically asking because I understand that there is a fundraising approval also which has been taken in the board meeting.
Yeah, so Aditya, this is sort of, I'll update you about the Capex plan. So this year our total Capex that we have done in FY 2021 was around 167 odd crores. And you are absolutely right, our Capex intensity will go up with this more PLIs coming in and expansion of capacities in various verticals. So my sense is though final numbers has to be worked out, but yeah, it should be somewhere around 200 crore plus kind of a Capex number for next year that we're looking at. If you look at our balance sheet, I think so, we have a very strong balance sheet with a cash balance of 164 crores and a net debt of 8 crores. Our working capital intensity is also quite low right now, and operating cycle is also in the range of 0 to 2-3 days. And also on top of that, I think so we have enough working capital facilities and undrawn long-term credit facilities to ensure that we'll be able to fund the same through internal accruals and some form of controlled debt. But having said that, we are taking this enabling provision just to create this corpus. So in case tomorrow the situation really worsens or the demand doesn't normalize, then and because of this Capex commitment that we already have and other opportunities that may come in, then the idea is to take a enabling provision from the board and ultimately get it approved by the shareholders as well in the upcoming AGM.
Also, Aditya, taking forward what Saurabh has just shared, if you look at the PLIs, in the case of IT products, the Capex requirement as per the government is 5 crores a year. In the case of lighting, I feel as per the various thresholds that are given, it should be around 10 to 15 crores a year. And same is the case in AC components. In the case of telecom, it's 20 crores a year. So these 4 PLIs are not that huge. And what is a committed number is 50 crores for telecom. And then over a period of 1.5 years, it's going to be around 100 crores for refrigerators.
Thank you. Mr. Bharti, may we request that you return to the question queue for follow-up questions. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Ankur Sharma from HDFC Life. Please go ahead.
Yeah, hi sir. Good evening. 2 questions from my side. One, if you could just reiterate your FY22, the sales you're looking at, and also by segment, what kind of, in value terms, numbers you're looking at for FY22?
Yeah, I'm going to start this side.
FY22?
Yeah, please go ahead, sir.
So FY22, as of now, because of the pandemic, we have our internal budget. But as of now, how the market is going to open, how the demand is going to pick up, it's very difficult to say. So to share those numbers at this stage, I think will be premature. So in this fiscal, we have a large share of the global revenues, which I'm very sure we're going to meet the internal targets. On the domestic front, I think one will have to wait and watch to do the final number crunching.
Okay, fair. And just a second question to Saurabh, if you could share the FY21 volume numbers by segment, please.
So Saurabh, can you please do that?
Yeah, I'll do that. Yeah, so basically, just give me a minute. Yeah, so you're basically, Ankur, you're looking for Q4 numbers or you're looking for the annual numbers?
The annual numbers will do. We have the 9 monthly already, so if you could share the annual, please.
Yeah, so annual numbers in LED TV, our numbers for the full FY 2021 was 27.9 lakhs, as against 21 lakhs 1920. For AC PCBA that we do with a Japanese partner, the number there was around 11 lakhs. As far as the lighting SKUs are concerned, in LED bulbs, it was 18.5 crores. And batten, there has been a significant growth of 90% year on year. So the batten that we manufactured in FY 2021 was 1.4 crores. Downlighters was 34 lakhs. And then others, which includes TLED LED drivers and glass, was around 87 lakhs. Washing machine was 8.9 lakhs as against 8 lakhs in 1920. And then we manufactured 9 lakh smartphones and 24 lakh 2G phones. And then we had a separate business for Samsung 2G phones. There the volumes was almost 2.17 crores. As far as security systems are concerned, we did 33 lakh of CCTVs and IP cameras and almost 8 lakh of DVRs. And set-top box, as mentioned by Mr. Lal, we did around 22 lakh of set-top boxes in 2021 and almost 500 units of RT-PCR machines, the medical electronics.
Thank you. Mr. Sharma, may we request that you return to the question queue for follow-up questions. The next question is from the line of Bhumika from DAM Capital. Please go ahead.
Yeah, thank you very much, sir, and congratulations on a good set of numbers in a difficult environment. So just wanted to understand, in this quarter we've seen a marginal slip in mobile revenues on a QOQ basis. So has there been a shortage of some input material which has impacted that? And my second question is that, we've talked about several PLI schemes from laptops to telecom, etc. So over a period of 2 to 3 years, assuming we get the license for the same, what kind of incremental revenues we're expecting from these PLI schemes?
So, Bhumika, responding to your first question, the shortage of chipsets and displays has definitely had an impact on the mobile business. So demand has been robust, but the supply chain challenges have had an impact, and they continue to have an impact. On the PLI revenue side, so you know that we have already shared the numbers on the mobile side, right?
So, but
that's how it's going to pan out over the next 4 years, because we are confident of meeting the upward ceilings as stipulated in the PLI scheme. That's 4,000, 6,000, 8,000 and 10,000 crores. On the other PLI schemes, it's still in works. We are still working out, but we feel confident with the tie-ups that are in works that whatever is the threshold and the upper ceiling stated by the government, we should be able to meet the numbers. It's slightly premature to share with you those numbers.
Sure, sir. Sure. I'll get back in the queue. Thank you.
Sure.
Thank you. The next question is from the line of Renu Baid from IIFL. Please go ahead.
Yeah, hi, good evening, sir.
Hi, Renu.
Hi. Sir, my first question is, if you look at the washers, now that you mentioned that by the third quarter you would be expecting volumes for Bosch to pick up, what kind of volume growth are we expecting here? Because in some of the media statements, Bosch India head himself mentioned that the launch of fully automatic washers is postponed to Jan 22. So would it be a soft launch initially and then volumes will stack up towards the end of the year, or how are we looking at this portfolio scale up?
So you're specifically talking about fully automatic top loading from the new plant, right?
Yeah.
So Bosch has a very complex and a very long duration approval process, which is over a period of 7 to 8 months. So those samples of first platform of 6 to 8 kg have already been submitted, and they're going through the reliability process. So it's not going to be a soft launch, but I feel that our deliveries to them would start for sometime around October. And they're going to formally launch in December, January. When I mentioned about the commercial production to start from August, September, here we're talking about different models which are for other customers. So those toolings are awaited by June and early July, and we plan to launch that by August, September. That's what I was referring to. BSH Bosch is going to be in October, November deliveries. for 6 kgs first, 6 to 8 kgs.
And how should we look at the revenue numbers from this category inching up in the next 2 years as operations stabilize in a normalized environment?
So the capacity here is around 6 lakhs. One is targeting that in the next 2 years or 2.5 years, one should be at 80% of the capacity. So there should be approximately 550 to 600 crores of revenue. And lower double-digit operating margins.
Got it. Sure. And on the lighting side, last time you mentioned that irrespective of the PLI, we are going ahead with the Capex plan. So what are the updates there? And obviously, if it comes under PLI, we'll have the benefits there. But the benefits are for components under PLI, and obviously the plant is for the finished product. So where are we in terms of that manufacturing facility, and by when do we expect the facility to come up on stream?
So, Renu, the PLI guidelines for LED lighting focuses mainly on creating the component ecosystem.
Correct.
Right. And there is a 6-month window for application. The application they're going to start welcoming from 1st of June up to 30th of November. Now, there are various categories there. Now, in Dixon's case, we are going to confine ourselves in the component space only into the domain that we understand deeply. And that domain is plastics. So it's going to be plastics, which is going to be a backward integration piece for, let's say, extrusions or mechanicals. That's what we're going to pursue, right? And it's not going to be a huge capex. It's going to be a capex of 50-60 crores over a period of 4-5 years. But definitely, it is going to increase the margin by 2 to 3%, 1.5 to 2% in the categories in which we're going to get into mechanicals.
Got it. And most of this capacity should be able to cater to our captive requirement itself, or we might look at supplying to other vendors as well?
So initially, it's going to be for captive.
Got it. So basically, eventually the benefit...
In pattern itself, first focus, let me be more candid with you, is going to be focusing on the extrusions of batten. As I had shared in my opening remarks, the capacity of batten has been expanded to 3 million. And we're going in for another round of expansion to almost 5 million. So the first focus is, which is being evaluated as of now, is going to be for investing in the extrusions of battens.
Thank you. This is the operator. Ms. Bed, may we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Sonali Salgaonkar from Jefferies India. Please go ahead.
So thank you, sir, for the opportunity. So my first question is regarding, the medium outlook. Now, I understand it is a bit premature to talk from the new PLI scheme perspective, but, overall, with the so many new products that you have launched and so many new categories that you have entered, over a 3 to 5 year time frame, what would be the kind of revenue growth and the operating margin trajectory that you would foresee?
So let me share with you our business concept. First of all, we might be looking to be getting into various categories. However, I emphatically state that we are sticking to what we know well and we have a deep understanding. And across all the product categories that we are getting into, it's all about electronics manufacturing. And that's our domain knowledge. And that's the core common factor across all the categories. So we'll go deep into it. When we're talking about deepening, I'm talking about backward integration, whether through PLI or without PLI. We're going to be bold and we're going to go broad. So we're going to spread ourselves. So that's the reason we're getting into various categories. So that's what we're pursuing. Now, please appreciate that in the last 3 years, we have more than tripled our revenues. And if things go fine, it's going to be a huge growth in this fiscal also, in spite of the pandemic. So it's difficult to put in the numbers, but I feel that within 3 to 4 years, we should be, if not more, at least 3x of where we are now.
I understand, sir. So, and my second question is, any further update on the wearables category that we have entered into, in terms of what is the kind of opportunity that we are perceiving over here, and how do we expect to ramp up? Thank you.
So in wearables, you know that we have a tie-up with boAt. The commercial production for boAt, for one of their SKUs, is already started. We are going to be deepening this relationship with boAt because boAt has recently had a round of investment. And this relationship, I can't share with you at present the contours are the same. But I'm very confident it's going to be deepened to a very different strategic level. Right. And we are also awaiting a PLI for wearables and hearables. So we are awaiting that, and that's how we're going to be pursuing. At present, that's what the status is, but it's a high-growth category in India, and we are going to be pursuing it aggressively.
Thank you. The next question is from the line of Ashutosh Garud from Ocean Dial AMC. Please go ahead.
Yeah, can you hear me?
Yes.
Yeah, please.
Yeah. So my question is, and vaguely the earlier participant did touch upon it, since we are getting into these many categories, and I understand from a manufacturing point of view, we do have the expertise from the electronics perspective. But if you can give a broad idea of how you're managing this from a mid-level management people perspective, from a relationship perspective, and how is the marketing, and because these the companies which we engage in different segments, they would be how do we mine these companies? So on those lines, if you can give a broad strategy perspective, if we are going to grow so fast, then we should have the middle-level management who can handle the long-term relationship.
So, there is a very significant effort in building up the middle management team. We are in the process of hiring some large global consulting company on building up and mapping our manpower requirements. That exercise on the way, and very shortly we should be able to finalize the consultant. But the middle management build-up is already happening. Please appreciate, just to give you certain examples, in the new category that we had of, let's say, in the project for Samsung, for mobile phones, we were able to execute it within a short span of time of 6 to 7 months. And nothing happens without creating the middle management robust team, because the customer satisfaction of a highly demanding customer is an extremely important thing. And the same thing has happened in the execution of our new mobile project, in our new set-top box project. So I'm not in a position to share the finer details, but please be rest assured that adequate resources and the organization build up at the middle management level across the various functions, which is engineering, manufacturing, quality, logistics, supply chaining, manufacturing engineering systems, IT, is always on the way.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Naval Seth from Emkay Global Financial Services. Please go ahead.
Sir, I have two questions. So first is on, in earlier interactions you had stated that you are working with EY on blueprint, on various aspects. So can you elaborate on that? Where are we and what is the progress there? Second would be on, what Saurabh has explained on fundraise, but apart from the growth opportunities which are immense, what you had spoken in your initial remarks, are there opportunities which you don't want to comment, but are there opportunities specifically which are still on the table, which you are pursuing beyond these, and hence, if at all potential fundraise will also come in, if at all it is required?
So, Naval, responding to your first question, the Blue Book has been finalized, and the rollout is going to happen from 1st of July. And it covers various aspects of business. It covers HR, recruitment, manpower planning. It covers supply chaining, procurement, execution, customer interface, IT controls, finance and accounts, integration with SAP, so many things. So all that has been covered, it has been finalized. It's under the final stages of deliberation with the stakeholders. And internally is going to be rolled out on 1st of July this fiscal. That's a month more one is giving to the team. That's what the status is. Now, responding to the second question, you asked me a very tricky question. Yes, but I'm not in a position to share the details.
Sure. Thank you, sir.
Thank you. The next question is from the line of Chetan Jundodia from Alpha Accurate Advisors. Please go ahead. Chetan, your line is in talk mode. Please go ahead with your question.
Hello, sir. My question is with respect to the different PLI schemes that we are applying. With respect to these schemes, whether if you can please share what is the market size for these components in India, what is the domestic market size for telecom components, routers and modems, and also for lighting PLI for AC, PCB. So what is the market size if you can share?
So when we are looking at the telecom products, we are primarily looking at routers, modems and IoT products. And the truncated market opportunity for Dixon is somewhere in the range of 1,600 to 1,800 crores a year. This is as per our estimate. When we are looking at the AC PCB, current business is in the range of around 110, 120 crores. But if one is able to shift the supply chains to India under this partnership for servicing the global markets, I feel this opportunity can reach 400 to 500 crores. Now, when we are looking at the components for LED lighting, that is primarily small value. It is primarily for expanding the margins for captive consumption.
Okay. Sir, lastly on LED export, last time we had guided that company will be able to do revenue size of roughly around 3,000 crore in a span of 3 to 5 years for LED export. Where are we on this LED export thing now?
So on the LED lighting side, as I shared with you, we're expecting a breakthrough shortly. The samples have been approved. The commercials have been finalized with a large brand. However, LED lighting is a safety product. And the safety approvals and the product approvals on the technical side have to be certified by certain international labs. So that is the exercise which is in works. I'm expecting that to be over by July and the exports to start from the next quarter.
Thank you. The next question is from the line of K.U. Harish Pandya from ICICI Prudential Life Insurance. Please go ahead.
Congratulations to the entire team for great results. The first question is on TV. Based on the volume that Saurabh mentioned, if I look at the realizations, they are already above 13,000. So now are they sustainable realizations considering we are doing higher size TV? And in the past, related question is in the past we have seen that we get margins per unit basis, and so when the size goes up, percentage margin goes down. That holds true right now, and this margin drop is optically because of that which we saw in Q4. So, and how do you see going forward?
You're absolutely right. So the size, the average size of the TV being sold now has gone up. And that is in fact reflected in the revenues also increasing very sharply along with the volumes. But the per unit price has significantly gone up. Now in the absolute terms, the gross contribution goes up significantly. But as a percentage, there is a drop which you have correctly caught in the last quarter revenues.
Okay. And just last question. So when you mentioned that, understood. Yes. That global contract / demand would there won't be any issue with that, while domestic demand will depend on how this unlock happens. So if you can just bifurcate your products into where it goes, I mean, just to clarify, and how is it going currently? How the situation is currently for each product categories. It is a short-term phenomena, but just to get a trend.
So, if you see vertical by vertical, or in fact in all the verticals, the main contribution is coming from the domestic revenues only. The main export revenues in this fiscal are going to come from exports in the case of smartphones, which is almost going to be 55 to 60% of the number that we have kept for ourselves, which is the upward ceiling under PLI. And some starting of revenues for export under our LED lighting category. So that's the way. So on the export side, I feel fairly confident because the global demand is good. On the other domestic side, in certain categories like LED televisions, we've done fine, not that badly in April and May also. But I'm just keeping my fingers crossed, and I'm conservatively optimistic and sanguine that how the demand is going to pan out, because this COVID impact is slightly different. It's not slightly, but quite different from what it was last fiscal. In the case of lighting, if the markets open up, because it's a low unit product, low value units, I feel the demand is going to recover much faster. But in the case of higher value items, mainly the LED televisions and the washers, I feel the recovery might be slow. One is keeping the fingers crossed. How it's going to pan out is very difficult to share.
Thank you. The next question is from the line of Skanda Babu Naidu from ESI Investments. Please go ahead.
Congrats, sir, on a great set of numbers. So I just want to understand, heading into FY 2022, what kind of a margin profile can we expect across the board? What do you think would be sustainable?
So if you see the trend, in our case, the major increase is happening because of the change in sale mix, and that is getting more and more aligned towards a prescriptive business, which is a lower operating margin business. So in absolute numbers, the margins are going to increase significantly. The profitability is going to increase significantly. Now, as per the mix, I feel the margins are going to be in the range of around 4.2 to 4.5%, something like that.
Yeah, that's right, sir. That's right. So basically, it should be in the range of 4 to 4.5%.
That's great. And for the export business that you are kind of working on right now, which probably should start later this year, is that a higher margin business, and would that, if that side of the business picks up a little more, can we expect a little more margin expansion?
So initially, it's going to be similar or slightly even lower because we have to break onto the deeply embedded supply chains in our neighboring countries for getting those breakthroughs. But I think over a period of time, the margins are going to climb into a better zone. But initially, there might be slightly lower impact.
Thank you. The next question is from the line of Ankit from MRLR Capital. Please go ahead.
Yeah. Hi, good evening, sir, and congratulations on a great set of numbers. My first question is with regard to the relationship that has been established with Motorola. So, especially if I look at the product mix here, what is the product mix between, say, feature phones and smartphones in this case? And also, what are the countries that Motorola expects to serve through this relationship?
So in case of Motorola, everything is smartphones. In fact, a large part of the product portfolio is going to be 5G phones. And Dixon, as I was sharing, is the first Indian phone manufacturing company which has a 5G manufacturing infrastructure, which is called as an infrastructure. And the exports, the main country, target country for exports is going to be US.
Right. Thank you, sir. And if I was to kind of look at the longevity of the smartphone business, could you have, say, any estimates with regard to customers that you could be speaking to with regard to smartphones, and how does the perspective look like also for India? I understand a lot of players have their own plans, but there would also be kind of demand for people to kind of obviously look at specialized manufacturing.
Sorry, I didn't get your question. Can you please come again?
Sorry, sir. So this is with regard to the longevity of the smartphone business. Do you kind of see the product mix also shifting towards the smartphone business overall for your phones business, or do feature phones kind of continue to dominate the mix in the future?
No, I feel that more and more accelerated shift is going to be towards the smartphone. And that's the way it's going to pan out there.
Right. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Vikas Mistry from Moonshot Ventures. Please go ahead.
Sir, I'm having two questions. First question is on laptop, tablet, and hardware. You had said in opening remarks that MOU with global brands. What is the size of opportunity? And I want to understand the competitiveness at global scale, how much we are competitive now.
So if you see the PLI for IT products, the capital investment over a period of 4 years is 20 crores. And there is an upward ceiling on revenue. And there's a value addition plan shared by the government that in the year 1 there's going to be SKD, in year 2 the PCB assembly is going to be done here. Subsequently, the batteries and chargers and power supplies are going to be done in India. So that's the way it's going to pan out. So one has to still work out the numbers, but this MOU has been signed by with a large global brand. The factory has been audited and qualified by the technical people. Now, the final details of the business opportunity are going to be discussed once the approval comes through. There are 19 applications and all. They have to select 10. We feel we are a strong contender, but let's keep our fingers crossed. One doesn't know. So all this number crunching will happen once we have the approval from the government.
Can you throw light on competitiveness with respect to Chinese player?
Well, this is basically for servicing the domestic market.
Okay,
and
you know what is exporting it?
Under ITA 1, which is at 0% duty. But once you import, the inputs are also at 0% duty. If you are able to have a frugal conversion charge, and on top of it, one gets the PLI, that's an added advantage to the manufacturer as well as the brand owner in this highly competitive space. So you obviously become more competitive than Chinese player on account of the PLI. Now, when you go more and when you deepen the Indian manufacturing, the business case becomes more robust. Now, let me share with you. In my opening remarks, I stated that in telecom products like routers and modems, please appreciate that these products are also covered under ITA 1, and there is no import duty on them. We are going ahead with the manufacturing of those products without any PLI benefit because of backward integration and deepened manufacturing. We have been able to make a business case without any tariff support from the government or even the PLI. So the same thing is going to work on the IT products over a period of time.
Thank you. The next question is from the line of KU Harish Pandya from ICICI Prudential Life Insurance. Please go ahead.
Sir, you mentioned, our entry into or application into a lot of PLI schemes. Just you can broadly tell us the timelines either for the applications or by when we can, if selected, can start manufacturing.
So the application that has been already submitted is for IT products. We are awaiting the approval in next month or couple of months. If the approval comes, let's say by August, I think we should be able to roll out by Q3 end of this fiscal as far as the IT products is concerned. In the case of LED lighting and also the AC components, the guidelines have been rolled out. The date starting date for filing of applications is 1st of June up to 30th of November. So they've given a larger window. So it's being pursued, number crunching is being done, their strengths and the weaknesses and the challenges is being analyzed. So I feel that in Dixon's case, that rollout, when we pursue, is going to happen only in the next fiscal. This is for both lighting as well as AC components. As far as telecom products is concerned, the guidelines are still awaited. They have launched the scheme, but they still have to roll out the guidelines. So we're waiting for it. So it's difficult to say that how soon it's going to happen. But without the PLI, our telecom products rollout is going to happen in Q3.
Understood. And just last question on the LED monitors you mentioned. If you can throw some light on, say, realizations or profitability or market size, and how fast we can ramp up. That is the last question. Thank you.
So as I shared in my opening remarks, that we have already concluded a tie-up with 2 large global brands. The equipment and the lines have been ordered. I expect the lines to be installed by August, September, and the manufacturing to start in Q3. The capacity for this line is 1 million sets a year. But I feel that in this fiscal itself, we should be able to churn out almost 400 to 0.4 to 0.5 million of the LED monitors. And the operating margins, I feel, is going to be in the range of 2.7 to 2.9%.
Thank you. The next question is from the line of Pulkit Patni from Goldman Sachs. Please go ahead.
Sure. So thanks for taking my question. Sir, I have 2 questions. So my first question is, if you look at some of our products like lighting, etc., which is fairly fungible. The same bulb that we make for one company, we can sell it to 10 other domestic brands. But as we move into some of these JVs, MOUs with specific, hardware companies, to what extent will our capacities be fungible? And the reason I'm asking this is that our MOUs longer term, that tomorrow in the possibility of any business sentiment changing for any of these large global players, does our capacity sort of become more like a liability for us? So how is the new business that you are targeting different from some of these generic products that we were doing so far? That's my first question.
So, responding to this question, the main thing when we're creating an asset base is one is looking at the fungibility. And please be rest assured, all the new investments that are coming up, they're primarily fungible. So the lines of telecom products, mobile phones, we do a set-top boxes, we do a medical electronics. We'll be doing our IT products. And all the dedicated equipment for the anchor customer, the commitment that we recover in investments are well entrenched into the definitive agreements. So please be rest assured that all these investments to a very large extent are fungible. Again, I state, the core is electronics. And the main gross block comes in the form of the SMT lines.
Sure, sir. That's helpful. So my second question is more, broadly on the PLI scheme. Given the fact that we are making investments, other companies are making investments, are these PLI schemes in compliance with WTO? My only concern is it should not happen after a couple of years. You have some issues raised by WTO on these schemes. So any view that you have there, given that these are some of the key investments that we are going to be making?
So WTO is primarily comes into play if you are subsidizing your exports. Now, the PLI initiative started by the government as a replacement first to the MEIS scheme, of the Government of India, which was to incentivize exports, and in which there were challenges on the WTO compliances. So the MEIS scheme was withdrawn and the PLI scheme has been launched. Now, PLI scheme is primarily to promote the manufacturing industry, electronics and other ones in India. And what our understanding is that has been well thought out so that it's absolutely compliant with the WTO requirements.
Sure, sir. I mean, the only reason I asked that question is because some part of this also is going to be exported, and that's where maybe there is sort of that gray area. Anyways, thank you so much for answering.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments.
So thanks very much, and thanks for being with us. Our teams are always endeavoring to deliver what we commit, and we're working on it. Presently, there are challenging times. The first and the foremost is to look after the Dixon family members and our extended family members. But in medium term and even in short term, we have a strong conviction on our business model and in our industry in which we feel we're sitting at an inflection point. So again, I want to thank you for all your support at all times. Thank you.
Yeah. Thank you, everybody. In case anybody has a follow-up question, you can call me. I'll be more than happy to answer that. Thank you very much.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, on behalf of Emkay Global Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.